from Roxgold and their President and CEO, John Dorwood. John, please.
Thanks very much. Good morning, ladies and gentlemen, and thank you for coming and your interest in Roxgold. Roxgold is operating the Yaramoko gold mine in Burkina Faso, extremely high-grade underground gold mine at the 55 zone, and we have just started construction of our second deposit, Bagassi South, which is located just a little under 2 kilometres from the 55 zone, and this will support a very nice organic increase in our production profile starting at the end of this year. Very high grade, as you can see there, running at 17 grams per tonne in the measured and indicated grade, and we saw very high grades last year and are continuing to do so this year, underpinning some very strong operating results at the company. Last year was a very strong beat for us on our guidance. We initially came out with 110 to 120,000 ounces of gold. We subsequently, 105 to 115, we subsequently increased that in September to 115 to 125 and ultimately produced just on 127,000 ounces. Achieved a very low cost. You can see there cash operating cost of $438 and an all-in sustaining cost of $740, which was really driven by a significant investment in our underground development. We are about 2 years ahead of where we need to be to access our stoping plan. So we've got a lot of waste development under the belt, a lot of stopes open and a lot of open faces to support our mine plan. You can see the fourth quarter was very strong for us. We finished with a 35,000 ounces for the quarter, milled over 17 grams per tonne and enjoyed 99% recovery. So it speaks to a very simple, straightforward metallurgy at the project. This quarter, sort of the most recently past quarter, Q1, was also very strong. It was our strongest quarter. It was a record quarter on many fronts. We did just over 40,000 ounces. We put through nearly 72,000 tonnes through our mill, which was a record. It's nearly 10% above our nameplate capacity. The mill is going extremely well, and we've got a number of optimisation strategies underway that we're looking to deliver. As you can see there, head grades were maintained very strongly, just on 17 grams per tonne, and we dropped below 99% recovery, which I was very disappointed about, but have spoken to the guys on site and we'll be looking to rectify that. Built up a nice run of mine, a ROM pad, 44,000 tonnes. It's about 3 months, a bit over 3 months worth of production, 2 months worth of production at 12 grams. And have worked hard to have a very strong safety record. And you can see there we're now greater than 4.5 million hours lost time injury free. The 55 zone, this is our flagship deposit. As you can see there, dips quite strongly. We're mining currently in this area around here. This is where around down to 200 metres below surface. The ramp is down to around here below 300 metres. And as you can see, our exploration last year extended the drilling all the way down to 1,100 metres. And that was very exciting because what we intersected down there was not only a continuation of the very high, strong grades that we've seen in the upper parts of the mine, but the ore body looks like it's getting thicker. One of our top holes last year was 23 grams over 21 metres, true width of about 14 metres. And the ore body that we're mining today, that you've seen can deliver cash costs around the $400 mark, averages 3 to 4 metres wide. So potentially, and it's early days, but the ore body could be getting thicker at depth, which would be very, very encouraging for our economics. At the end of the year, we're in very strong position. We had cash flow from operations of $84 million, all US, 23 cents a share, which for a $1.20 Canadian share price we think is relatively undemanding. We built up a strong balance sheet. Our cash on hand was $63 million and our face value of our debt was 47. That cash has continued to build in the first quarter, probably knocking on the door towards $75, $80 million now, and we've repaid more of our debt down below $45 million. So this is a genuinely cash flow generative mine. A lot of mines will get up and tell you that they're going to generate all this cash flow. Yaramoko actually does it, and we're starting to put the runs on the board on a quarter-on-quarter basis. This was the results of our guidance, as I mentioned. As you can see, came in above the top end of our revised upwards guidance. On a cost perspective, we were below the bottom end of our range on cash operating costs, $438, and on the very bottom of our all-in sustaining cost at $740, bearing in mind that we probably did about 25% more waste metres within that cost than we budgeted on originally at the start of the year. This is a graph of our increasing throughputs through our processing plant, I think to try and show that we've got a continuous improvement program running well. You know, Q1 was a record quarter. Q2 is looking very strong. It's off to a good start as well. So we anticipate that we'll continue to wring efficiencies out of the Yaramoko plant as it currently stands. Just a mention to the balance sheet, as you can see there. We basically funded this project with $75 million worth of project finance. Coming into production in 2016, we had that debt hanging over us, and we've now moved to a strongly cash flow positive position of over $35 million of net cash. In really, that took a little over 18 months of operations, so it's really, truly is a cash machine at Yaramoko. Return on equity, this is a measure that you don't see a lot of in the gold space for obvious reasons. You can see there, Roxgold generated a return on equity of 24% last year, so very efficient from a capital perspective. I'll talk a little bit more about our growth project at Bagassi South, which is organically funded, and we anticipate maintaining, if not improving, this metric and showing strong returns to our shareholders. 2018 guidance, 110 to 120,000 ounces, cash operating costs in the mid to high 400s, all-in sustaining cost around 780 to 830. I think given, and I'll just talk a little bit about, our first quarter, which was 40,000 ounces, I think we've probably been a little on the conservative side with our guidance for 2018. Cash costs, I anticipate, we'll publish them later in May, but I anticipate they'll start with a 300, and our all-in sustaining costs will be less than $700 an ounce. So a very strong start to the year, puts us in a good position for a beat on this guidance, I think. Bagassi South, this is our first development project. It's made up of two lenses, 2 kilometres south of the 55 zone. Capitally, a very efficient project in keeping with what we've tried to set up with our high returns, low investment, high impact. $30 million to get this into production. We have that money on the balance sheet today. We don't have to draw down any debt. We don't have to raise any equity. We're not a gold mining company that comes back to market to fund its dreams and plans. The project's off to a very good start. We're now anticipating being in ore in the third to fourth quarter and putting that material on the ROM pad. And this will underwrite an increase of about 30% of our production. And this will take us to sustainably north of 160,000 ounces a year, with a very, very attractive cost profile. As you can see, there's some very strong metrics. Not surprising, given that we're starting with a 16-gram resource again down here. This is a little schematic of what the underground will look like. This is just the first lens, QV Prime. If you went into the page about 70 metres, you'd strike another lens called this is QV1. You'd strike QV Prime, which again is early days. We've done some more drilling on that. I think that will make its way into reserves over the coming 6 to 12 months. So it shows a little bit more, some more potential growth at Bagassi South, and the development will be largely in place to access that additional ore. Some photos of site works. That's the box cut going in. Everything going according to plan. We're well on track. Haven't run into any issues yet that we anticipate will cause us any concerns going forward, and meeting that timeline, as you can see there, with Q4 first ore on the deck. Processing plant, the one that's going so well now, is being expanded. It's going from about 750 tonnes a day, although it's running around the mid-800s as we speak, going to 1,100 tonnes. I hope there's some upside in that. Essentially, we're putting a secondary crusher in and some additions to our gold room and our elution circuit. Straightforward. The project was originally delivered on time and under budget, or ahead of time and under budget, I should say. So we've got a good track record of delivering on our development promises, so I think this will follow suit. This is our production profile from reserves. As you can see there, pretty consistent production from Yaramoko, and then we've sort of got this burst coming in from Bagassi South. This profile is what we published in our most recent technical report late last year, and it shows, I think, a baseline of production from 55 zone augmented by Bagassi South. Both 55 and Bagassi South are open at depth and along strike at Bagassi South. So I anticipate that those yellow bars can be maintained at a higher rate for longer, and that's really our key challenge as the company goes forward. It's been early days in Yaramoko's exploration history. We are now starting in earnest, and I think what we'll try and do is continue this rate, if not improve it, over the coming years, supporting the 10-year mine life that we currently have at the 55 zone. I'm just running out of time. We have a very active exploration program. This year is really our first year of strong exploration on the regional targets. We're planning 65,000 metres on a host of targets along the Yaramoko Shear, which hosts the 55 zone and Bagassi South, as well as the Boney Shear, which hosts the Semaphos Sioux project to the north, and Endeavour's project, Hyundai Gold project to the south. So we think lots of tickets in the lottery, as it were, underwritten by a very, very strongly performing operation at the 55 zone and coming to Bagassee South. Am I run and done? Good.
Thank you very much.
Thank you very much.